Hello and welcome back to my YouTube channel. My name is Anu Joshi and I'm a real estate broker based in Toronto and serving the GTA. I'm also the founder of Anuvision Group. On today's video, I'm going to be talking to you about the TRREB real estate market statistics for the Greater Toronto Area for the month of February 2023. February sales in the Greater Toronto Area were down substantially from the pre-rate hike levels of early 2022. However, the number of new listings also dropped substantially year over year. TRREB President Paul Barron also shared that many homebuyers have decided to purchase a lower-priced home to help offset higher borrowing costs that we're currently seeing in the market. The detailed stats do show that the share of home purchases under 1 million this Feb is actually up compared substantially to last Feb. The share of sales below 1 million in February of 2023 was 57% of all Feb sales versus only 38% of all Feb 2022 sales being under 1 million. In total, GTA Realtors reported 4,783 sales through TRREB's MLS system in Feb of 2023, which was down 47% compared to Feb 2022. Now, if you remember, Feb 2022 was the last full month before the onset of interest rate hikes, which began in March of 2022. The number of new listings entered into the systems was also down by a similar annual rate of 40.9%. New listings continue to drop year over year in the GTA, and as you can see, we aren't seeing too many listings out there in the market. There's a ton of factors that contribute to this. One, obviously, being the economic state that we're currently in. Two, rising rates. And three is inventory. We get into this something that I like to call an inventory loop, right? It's different when it's first-time home buyers that are buying a home for the first time and releasing a rental unit back into the rental market. But it's their first foray into home ownership. That's one statistic, and that's one way to measure sales and activity. But on the flip side of it, a lot of what's happening in the GTA is actually selling and buying, right? Anytime that there's two transactions, for example, somebody already owns a home and is upsizing or downsizing to another one, or somebody already owns a condo and now they're moving into a house. There's two parts to that transaction. They have to both sell their current location and buy a new home, right? And so those two transactions go hand in hand. Now, the reason that a lot of people aren't choosing to list their house on the market right now is because we don't have inventory. Because if they sell their house, where are they going to move to, right? And that's the question that we see a lot of sellers asking: where am I going to move to if there's no inventory out there? But the more that they ask these questions and the more that they don't list their own home, there is this cycle of not having enough homes out there. And so we get into this cyclical sort of trend. If there are enough listings and if there is enough movement and if the buyers that do perhaps come into the market as we see suggested for the rest of 2023, as some of the polling suggests, we may see, sort of that uptick. There's more buyers in the market, more sellers are saying, okay, you know what, I think I can get a great price for my home. Okay, let me go out there and look. And in turn, they're listing their house, and other sellers are doing the same thing. They're all listing their houses, and so we're seeing listings go up. Eventually, competition will also go up, as we've seen previously in the GTA markets. But right now, I think we just need to sort of get out of that loop of a lot of sellers just sitting on the listings, and we don't have very many listings out there for any buyers that are comfortable with the current interest rates. I don't know who, but those that are, there's not much for them to buy out there, right? And so we have to keep that in mind, inventory as well, when we talk about volumes. If there was inventory out there, of course, when the first interest rate increases happened, everyone was kind of stunned. And when we increased the rate so much that a lot of people, it became prohibitive for them to buy. Of course, there's that statistic where, more and more buyers were sitting on the sidelines. But now what we're seeing in terms of when I'm talking to my clients and when I'm talking to clients that are thinking about getting into the market, either right now or in a couple of months' time, some point in 2023, we are seeing that there's this, I want to say it's sort of an easing into the current economy and easing into the interest rates. At the beginning, there was this shock, like, oh my God, the interest rates went up. And then people started sort of easing into it, right? I'm not saying it's easy. I'm saying that the interest rate raises have become clear enough in the market that they're here to stay, that there are some people, not every buyer is going to be able to work around it, but there are some people that are able to work around it, adjust their other finances accordingly, give some and to get some, that sort of thing, in certain situations. Again, this doesn't apply to everyone, but we are seeing, in terms of the buyer conversations that I'm starting to have now with my clients, that more and more people are likely to get into the market. Obviously not jump in right away. There are a lot of considerations. It is expensive with the rates being where they are. However, more people are considering getting into it, as compared to fall of 2021. Now, that little bit there was just based on my experiences with my clientele and the conversations that I'm having on a day-to-day basis. That may not apply, across the board or all across the GTA or for all home types, but I'm sharing basically that's been my experience with my recent clients. Now, getting back to the statistics, TRREB also saw that recently released Ipsos polling suggested that buying intentions have picked up for 2023, and they believe that this increased demand will run up against a constrained supply of listings and lead to increased competition between buyers. This will eventually lead to a renewed price growth in many segments of the market as the year goes forward. Now, with TRREB stats, etc., and having attended the market outlook, the market outlook events that TRREB hosts at the start of every year, a lot of what's going on right now and what the polling and what the stats are suggesting is that in 2023 we're going to see a year of two halves, and so what this means is that the first half of the year, which is, right now we're finishing out Q1, and soon going to be heading into Q2. This time is going to be, more about adjusting to what's happening out there. Banks are adjusting to what's happening. The Bank of Canada is, doing its own thing, but other banks, like the Big Five, they're actually setting their interest rates. I've heard recently that fixed rates are actually lower than variable rates, try to get people back into the market. I've also heard that mortgage inquiries and mortgage applications are up by 50%. I don't know if that's probably not year over year. Actually, don't quote me on that. But they are up from, recent time. And so keeping that in mind, as we go into the second half of 2023, TRREB and Ipsos and all these statistics and all this polling is suggesting that towards the end of the year, we are going to see activity start to pick back up. Now, I'm not a fortune teller. I can't tell you if it's going to be, 2017 all over again, if it's going to be 2021 all over again, or if it's going to be like March 2020 all over again. I don't know. Not a fortune teller. But where it's trending, and we've had this sort of like pent up demand that, in the second half of 2021 and the first half of 2022, people weren't really making moves. Life goes on. People need to move for other reasons than, equity cash out and just investment. If we take into account all the people that are, upsizing, downsizing, moving for a job, or moving because they want a different lifestyle or they want to be in a different city, all of those factors, the economics of it is a one portion of it. I'm not saying it's a small or big portion. I think it's a big portion. It affects a lot of people. However, it's one portion of that, right? So all the people that want to move due to lifestyle change, because they desire to do so, as soon as the market starts showing some semblance of, okay, this can happen, or interest rates can go down, or maybe the stress test can be alleviated a little bit. And all of these things, when these become even slightly more favorable, I think that we will see a lot of these buyers, especially the ones that were sort of waiting on the fence, start to get back into the market. And again, that may or may not be right away, but stats and polling suggests that towards the end of 2023, we will start to see that activity back. Now, in terms of average prices, the average selling price for February 2023 was $1,095,617, which was down 17.9% compared to Feb 2022. Now, I'm going to share my screen with you and show you quickly the statistics, breakdown by housing type, broken down by housing type. Now, first and foremost, this is my favorite chart. I show it on all my market stats videos, and I'm going to do that here as well. So if we look at the sales activity, which is volume of sales, number of sales that happened, this year it was 4,700. Last year it was over 9,000 just in the month of Feb. So we see that huge drop, right? Same thing with the average price. Right now it's $1,095,000. Last year at this time in Feb, it was 1.334 million, which is a substantial difference again. Number of sales, so volumes dropped 47%, and the average price dropped 17.9%, as I mentioned. Another thing that I wanted to highlight that I also highlighted on my January stats video was the big difference in terms of the days on market. So days on market basically refers to how many days a listing or a property is spending on the market before getting sold. And interestingly, in the year-over-year summary, you can see that in 2022 Feb, the average days on market that a property needed to sell was 11 days. Now, they're still selling, but they're selling on an average of 33 days. That's over 1 month of sitting on the market. That's an increase of 200%, which is a substantial indicator, right? So in addition to just looking at sales activity, so volumes and the average price, we also have to look at days on market to give us a better indicator of kind of what's happening in the market, right? We can have the same number of units selling, we can have the same price of units selling. However, the days on market gives us an indication about the overall pulse of the market, what the buyers are thinking, the fact that they're taking longer to make decisions. It can indicate a number of things, but the days on market is one of the stats that I like to take into account, just to give me a better pulse on what's happening in the market, above and beyond just looking at the average price and the volume of sales. Now, if we break it down, the average price by home types here, we've got detached, and the average price of a detached home sold in Feb was 1.439 million. For semi-detached, it was 1,069,000. For townhouses, it was 934,000, and for condo apartments, the average was 705,000. Now, if we look at this column here, detached home sales, in terms of the pricing, right now, even though we had an average of 1.4 million, that was actually down almost 20% from last Feb. Now, if you remember, last January and last February, we had that crazy boom of a market. It was, I don't know if you can call it early spring market or whatever it was. It was crazy, right? We had very low interest rates. In March, they started to go up, but in February, they were not up. They were very low. There were a ton of volume of sales happening in the market, as we know. So compared to that, I was always expecting this. I was expecting January 2023 to be down year over year and February 2023 to also be down year over year. Now, it will be interesting next month to see what happens in March year over year, because last year in March in 2022 is when we saw the interest rate get hiked. That was also when tensions between Russia and Ukraine began. That was when gas prices shot up. A whole bunch of things started happening right around last March. So if you're with me, my clients can speak to this. And even if you were in the market, if you were listening to the news last March, things hit the fan. Okay, I'm not going to tell you which things, but things hit the fan, right? And that sort of downward trend began in March of 2022. So it will be interesting. However, when we compare February 2023 and Jan 2023 back to last year, we are seeing year over year drops, because there's no way that this year and the beginning of this year was going to compete with last year's insanely crazy market. Right? So detached homes, average price was down almost 20%, semi-detached, same thing. Townhouses down about 17%, and condo apartments also down 12%. So overall, in terms of average pricing, it's what we expected, or it's what I expected when comparing February and January 2023 to February and January of 2022. Obvious. Again, it will be interesting to see what happens in March if we continue down that path of year over year decreases, or if it sort of starts to level out, because last March was challenging for different reasons. This March is challenging for different reasons, right? We may or may not have another interest rate hike around the corner. I do post videos about the Bank of Canada rate and what they're sort of talking about and doing and what they have done and the impact of that. So I'll post that link also below, so you know what's going on with that. So depending on what they decide to do in March, it will probably impact what sales we see in March. But as of right now, I'm not a fortune teller. I'm just a real estate broker here to educate you and my clients so that you have all of the information that you need to be able to make a sound decision. I say this all the time to my clients, and I'm going to say it here as well to my viewers. In any economy, especially in one that is, troubled, I want to use that lightly. But when there's things going on in the economy, it's important to follow the advice that makes sense for you, right? On a YouTube video, I can't give you a blanket advice that's going to apply to every single person that's watching this video. I can't do that. I'm not a magician. No realtor out there that thinks that they have the answer for everybody in this sort of, one-to mass setting. It's not true. Okay. You have to sit down and sit down with your professional. So whether that's me, I'd be more than happy to discuss that with you. Discuss your finances, discuss your family's goals, and discuss what it is that you're looking to get out of your investments, and where you're putting your money, and what real estate can do for you, and on what timeline, right? Because timeline impacts a lot of investing decisions, as it should. And so it's important to take all of those things into account before you take any banker, any realtors, any economist's advice on what to do with your hard-earned money. So if you do have specific questions about your specific case, I'm more than happy to talk with you one-on-one. I will put all of my contact info in the description box below, and I hope that you reach out to me. If this video was helpful, please share it with family, friends, or someone that might get some value out of it. Make sure you hit that like button, and also subscribe, because I do post new and informative real estate videos every single week. Thank you so much for watching this video. My last video that I posted is right over here, and the subscription button is right over here. Thank you so much, and I'll see you on the next one.